Happy Super Bowl weekend, everybody. This is Trader Geek Sam with your Saturday, February 7th, 2026 market review and preview video. Hope you're enjoying a very nice weekend or maybe even a super weekend so far. The big game is tomorrow, so I thought I'd try to get this out today. And we're going to start off by looking at major market performance yesterday, which was a nice rebound day. Oversold bout, can't bounce, doesn't matter. Bitcoin was up about 10% over the prior days, although it was probably down another 20% or 10% overnight, and it recovered before the open. Microcaps, the best performing equity class, up 4.47%. IWM, the small caps, up 3.6%. Mid caps, 3.21. So even gold recovered about 3%. And it kind of goes like by capitalization in terms of the order of how they fared yesterday. DIA making a new all-time high, and of course everybody was celebrating Dow 50,000, and let's go Dow 60,000, right? VTI total market index was 2.11 and exactly matching how the tech heavy NASDAQ did 2.11. SPY just under 2%. VIX losing about 18% on the week, although I believe that this was still positive on the week, the volatility index. UUP dollar giving up about 0.3 of percent on Friday, where we did not get a payroll report, our monthly jobs report for January. That's delayed until next week, I believe. Aggregate bonds were just flat. Taking a look at the major markets on a weekly basis, we can see that mid caps really still performed despite a wobbly week, 4.42%. Dow up to almost 2.5%, and then gold clawing back 2.25%, and the small caps up 2%, bouncing back. Worst of them, despite Friday's rebound of 10%, Bitcoin down almost 16.5%, and Mag 7 a losing week for them, down 4.67%. Tech obviously taking it on the chin this week with earnings reports from Amazon and Google both not faring very well, and then Meta giving up all of its gains from the earnings. These tech stocks can't seem to hold on to their gains. Apple was decent this week, but we'll look at the Max 7 in a minute. High yield bonds down 38 basis points, and SPY just losing 0.2%. So the bigger the capitalization, the worse they fared this week. So mid caps leading the way. For the market, it's same as the weekly. So we'll go on to a quarterly basis, which is basically 5 weeks, because this was the first trading week of February. And surprise, surprise, VIX is up 19% since the end of last year. And gold is still up 15% despite the smizing it took, if that's a word, 15%. MDY mid caps up 8.6, small caps up 7.66, and micro caps. So the smaller capitalization stocks are doing better so far on a year-to-date basis, as well as the Dow up 4.26. Bitcoin down 20% since the end of the year. Mag 7 down 4%. Year to date is the same as quarterly, so we'll move on. Taking a look at the sectors on Friday, strongest was XME, as we saw a bit of rally in gold and silver. XLK technology stocks rebounding 4%, and the XLI up 2.86%. So XLI, I mean, take a look at this chart on the XLI. All right, I hear you. I mean, what a beautiful uptrend on here. This is the weekly chart, daily chart over here, and nothing to complain about. I don't think this is a all-time high, but it's like it never even flinched in that downturn. So yeah, I mean, we've got all-time highs here in the industrials. All right, so let's go back to performance. XRT retailer stocks down 2.83%. IYZ telecommunication stocks and transports up 2%. The only sector losing yesterday was 0.39%. Those are the communication stocks, and that was because Meta and Google, two of their strong components, were down yesterday. For the week, transports leading the way, 7.5%, and telecommunication stocks up almost 6%. Staples on fire. Here's another one, another sector chart you'll want to see. Just worst sector last year and today, or this year so far, from 75 all the way up to 88. So I think we bottomed down here at the beginning of January and over here, but 75 was the bottom. That was in November, and we finally took off at the beginning of the year. So beautiful 2 week candle, and I think there's more gas in the tank here on these staples. So head back to here. XLB up 4.5% on the week, as was XLE. This is another sector that is doing very well, and the retailer stocks up 4%. Metals and mining right below there. Negative, basically, the communication stocks for the aforementioned reason. Then XLY, we've got Tesla and Amazon weakness, which are two of the major components of the discretionaries, down 2.62%. You've got XLK technology overall losing 2% on the week. Quarter to date basis, which is basically about 5 weeks, we see energy so far. And this is also year to date, of course, 19%. Metals and mining still up 18% despite the drubbing. That's the word I was looking for, that the metals took. XLB, in combination with a lot of the metals and miners and what have you, up 13.5%. Staples up 13.2%, and telecommunications and industrials up 11.6%. Transports confirming everything, 10.43%. And then we drop all the way to 5 on the retailer stocks. Real estate having a nice recovery, up a mere 4% compared to the rest of these. At the bottom of the list is technology stocks, down about 2%, and communications down 1.66%. And so is XLY. Again, Amazon and Tesla being the biggest weights there. Looking at major industries, shrink that a little bit so you can see it all. Over the last week, we had TAN, or the solar stocks, up 7.22%. Something's caught my tongue today. Can't seem to speak properly. ITB, these are the home builders, up 7% this week. And we've got XOP up 4.4, GDX 3.39, and we've got the pot stocks. Wouldn't you know, they're green this week. Robo, basically the robotics and other similar stocks. PEJ, entertainment, up 1 to 5. Worst one is the blockchain stocks, and basically crypto stocks down 8%. Software, you've been in a cave somewhere if you haven't been hearing about how bad the software stocks are. So you take a look at the chart of the software, and you can see here XSW as one proxy. And we finally got a bounce on Friday, but this has just been, from 206 here down to 155, and overdue, long overdue for some type of correction. And one of the measures that people use is the semiconductors compared to the software stocks, and you can see this just in a downtrend, overstretched, and there should be some reversion to the mean, which means either we're going to get a bounce out of software, or we're going to see a pullback in the semiconductors. So here's the semiconductor stocks having a nice bounce on Friday, just $19 from this all-time high up here at 420. Taking a look at the Mag 7 on a weekly basis, not looking good at all. So you can see here that Amazon lost 12%. Meta lost 7.68%, giving up all its gains from the earnings. Microsoft, weak, part of the software contingent, so losing about $29, and would have been more under the 400 mark if it weren't for Friday's bounce. Google, terrific earnings report, nothing to complain about, but poor price action. Same with Tesla. So the only one that's up on the week was Apple, was having really good action. Kind of strange, but I guess you can count this as a safe haven. Who knows? For the quarter here, we've got Google still up 3%. So the strongest of the Mag 7, and Apple up 2.3%. Meta barely up anymore. What a shame. That whole earnings run was looking strong and ready to go higher. NVIDIA basically flat on the year, and then Tesla and Amazon and Microsoft the worst of them all, given that it has software as its middle name. So one more thing I want to show you on kind of what happened last week, and showing you some let's see, did I not share this? Let's see if I forgot to share this particular PDF. Here we go. Yep, I did. All right. All right, there we go. So here, kind of the top 10 winners in terms of stocks, crypto leverage ETFs. So there's nothing here being filtered out. And airlines, where did that come from? Up 11.5% last week. Home builders, 8.18% in terms of ETFs. Transport, 7.46%. So the worst of them was up 5%. So the top 10 winners, excluding leverage ETFs. So I guess we didn't have anything in here with that was leveraged, did we? No. So I guess these are the same. And then everything, including leveraged ETFs. Okay, so this is excluding leveraged ETFs. This one's including stocks and crypto. This one's everything. So I guess microsector FANG index, 14%, mid-cap bull, 3x. 13.3, and then you see the rest here. So this is courtesy of Kirk Opportunities sharing this with you. So let's take a look, and now that we've kind of revisited a little bit of history, take a look at the multi-frame on the major indices, multi-time frame. We've got SPX daily, weekly, and monthly charts here. Just to give you an idea, red line here is the 200-day moving average. This purple line is the 100-day moving average. The blue line, sure it's hard to see a little bit, is the 50-day, and then the green line is the 21 EMA, and this little thingy is the 2 standard deviation Bollinger Band. So You can see the week started off strong on Monday. Looked like it was going to be a strong start to the month. It was not to be. We had a big dip on Tuesday, but we came back up. And Wednesday took us down. Thursday even down further. But here's the big pop up on Friday. So, and you'll notice here that I've got this kind of bull bear line. This is kind of a support line that goes all the way back to, I believe, October. And we did violate that. We closed below there and we went lower, but we simply bounced right back above it. So 69.20 is my line in the sand for kind of closing above or below the 2025 levels. So hard to believe that we're just basically 1% away from all-time highs after all the volatility we've had. We've got a very negative MACD, though it's still above the zero line, and we came from a level of call it 39 on the RSI, not quite getting to the 30 level and bouncing up to a neutral level on Friday. So there's more room to move up if we want to on the daily chart. Switching to the weekly, we can see here doji, another doji here, but this one's a lot more wide ranging. And you can see, as I mentioned last week, once we took out the lows here, it was fair game to take this down. So we went down almost all the way to the 21 week EMA, but we held the 8-week EMA on the weekly chart. So I think anything above the highs, 69.93 or below the 67.80 is fair game for kind of following which way it goes. But that's kind of trading, call it 201. Bull bear level is right there, the 61.50, but that's way down here where we kind of broke out. But first, we've got to see if we close back below the December low here. And obviously, there's a double, you can see here, I have a double top target. If we head right back down again, that's kind of a measured move. On the weekly, we have still a negative MACD. So we are on a MACD sell signal on the weekly as we are on the daily. And we're still in the 63, closer to overbought than neutral on the RSI. We can see here on the monthly chart, and again, bullish chandelier, bullish PSAR on both the weekly and the monthly time frames. And once again, look at this, 1, 2, 3 dojis. So a lot of indecision, a lot of going nowhere, sideways action since October. And but we ended up, at least so far, 1 week into February, at the upper edge of the doji, but lots of time left, exactly 3 more trading weeks in February. MACD is positive, but giving a slight hint of the fast line flipping over. RSI still strong at 76 on the monthly, nothing to complain about there. So bullish chart, kind of neutral at this point. We just need to see follow through on Monday. And you can see here, we have the options implied expected move here at about 120 points, give or take, plus or minus. And in case you didn't notice, on Friday, we had about 120 points alone in the SPX. And last week's expected move for the entire week was 118, and we got 120 just on Friday. That ought to tell you something about the volatility that's in here. And this doesn't even take into account the excursion that the futures did on Friday overnight. And I'll show you that right now. So here is what the candle looks like on the S&P futures. So we got all the way down to 67.51 and a high of 69.65. So 214 points in the ES traversing from the overnight session into Friday's close. Crazy, crazy volatility for sure. Taking a look at the NDX, not looking as strong as the SPY, and we haven't made a new all-time high since October 29th in the NASDAQ. And that's a bit concerning, given that technology is 34% of the S&P 500. Nice, beautiful candle on Friday after this, what I call a low close doji. And you would have expected follow through, but we were getting oversold. But again, Monday was strong after a very weak open on the future Sunday night, and then 3 days down, and a nice pop up on Friday. So that could be a band name. 3 doors down, three candles down. Anyway, we've got a negative MACD, and you can see this is flipping under the zero line. And on the NDX, we got down to about 34 for the relative strength before bouncing to 44. So we didn't quite get to the 30 level, but this was close enough to generate a bounce. Looking at the weekly chart, we can see that sorry about that. I had to pause so I wouldn't sneeze in your ear. And you can see that we have another doji on the weekly, and I call this the candy wrapper candle with wicks, long wicks at the top and at the bottom, longer at the bottom than the top. Big range for the week. So 24,455 to 25,840. So that's a good 440 points, 435 points, not bad. MACD is definitely on a sell signal, negative, much above the zero line, and you have RSI that is basically neutral at the 54 level. So you can see here we've got the options implied expected move for the NDX, which is about plus or minus 641 points on the week. And that's also grown since last week. And we have a close here below the 8 EMA, but we held the 21 EMA, this green line here. If we move on to the monthly chart, again, we're getting another doji forming here. So after this long wick candle here in November, doji, here's another one. So making very little progress since the October high. And, we have, I guess this needs to go. I don't think that's relevant anymore. I'll delete that. And then MACD looking to flip a little bit, the fast line over the signal line, but still way above the zero line. What's interesting is seeing the RSI, relative strength index. Will that go under the 70 overbought level after being there since what? May of last year, right after the April tariff tantrum that we had. So we can see here that the NASDAQ a little weaker than the SPY and also SPX, and driving the SPX, but bullish chart still. This is still, I would say, is neutral right now, neutral to bullish, and this one is definitely neutral to bearish, as I would like to call it. One last one, RUT. And a nice recovery on Friday after, again, cutting below, and same type of deal, except Tuesday was a bit stronger than the other two indices. And down we went Wednesday and Thursday, and Friday basically ended up closing the week positively on the small caps, whereas the other two were down on the week. We are in a bearish chandelier stop. That's a volatility stop, bullish PSAR. So we actually flipped that PSAR or parabolic stop and reverse stop positive on Friday with that close that we had. MACD is negative, but Friday gave this a little hook to the upside. We'll see if anything comes of that. Never got oversold, and we are in the neutral area on the RSI daily. Looking at the candle on for last week, nice looking candle. Again, this is the options imply expected move for the coming week, so it has no relevance to history. And after this topping tail and a red candle, this candle looks much better, but it's a definition of chop up, kind of neutral, down, up again. So going nowhere over the past, call it 4 or 5 weeks in the small caps. MACD solidly positive here, and we never really got overbought, and we are just a few points away from overbought again. On the monthly chart, again, this month is this week, so the candles look virtually identical, and you can see here a solid uptrend. MACD totally positive, looks different than the other two, the NDX and the SPX. And then we have the RSI at the 67 level. So we're waiting to see and hoping that the small caps would get to the overbought area and stay that way. So those are the three major bullish, bullish, and neutral to bullish if we get follow through on Friday. Next, we like to look at the VIX, and let me switch over to a daily chart, and you can see here that 3 days up, and then finally giving back 2 of those 3 days on Friday. We closed at 1776, and you'll notice that we've been, this red line is the 200-day, and we've been traversing it for days now, 1, 2, 3, 4, 5, 6, 7 days. And we finally closed above it solidly here, although this might be, yeah, we closed above that here. I don't think we closed here. No, this was the first day. So 3 days above the 200-day moving average. And we ended up holding it on Friday. So the 200-day moving average is at 1742. We closed at 1776. And usually when you get a 2 days of the VIX closing below the 200-day, that gives kind of a short-term buy signal for the market. So watch for that. Any close over under 1639, call it 1640 on the VIX could lead to a buy signal in the market. But that's 2 closes in a row. Anyway, this is the VIX, and still can't really get much oomph there. Got up to 21.77 on Thursday, but never really started going. But at least we got over the 20 level, and we had a whole 1 day close above 20 before they came in and sold it. Close relative of the VIX is the VVIX. We got as high on the VVIX to about 120, 119.6. The VVIX is the volatility of the volatility, and it's a measure of VIX call buying. And when we are under 100, it's not really a whole much of a concern. But when we do get above 100, then it's something I start watching. And over 110, this is kind of serious. And in fact, what we saw last week on Thursday, it was the first time we saw the VIX futures contracts lower than the spot VIX, and that took us into a backwardation, and that just meant that risk was here and now, but that lasted for all of a day. And you can see here the VVIX closed at 100.99. So right there at the 100 point level to keep everybody guessing. We'll see what Monday and next week brings. I think it's going to be a pretty critical week to see where we get, given the reports that are coming out, economic and earnings, and which we'll look at in a second. Taking a look at, and speaking of the VIX, let's take a look at the options. We closed at 1776. We'll call it 18. And if we go out 1 point out of the money to buy the calls, they're going to cost us about $1.26. If we're bearish on the market, we're buying VIX calls. It'll cost us about $1.26 for $1 out of the money. And if we're bullish on the market, bearish on the VIX, we're buying puts in the VIX, right? So those are about 20 cents. So the calls are still priced at higher than the puts. And this is about 6.5 times the calls over the puts. So this gives this particular data point, the edge goes to the bears here. So although you could see this as much as 20 to 30x the pricing of the calls versus the puts. So this is a slight edge, but again, it's only one data point. Taking a look at the SPX, as I mentioned earlier, just to just double check the standings, 120 points next week, give or take, is the expected move. And that hasn't changed any much at all since the close on Friday. So lots of volatility. And given that last week was only 118, this seems a little strange, right? We did close a little bit higher on the VIX on the week, but to only have a couple extra points is still elevated volatility, but less than I would have expected to see for this week. And that was thanks to the rally on Friday. Now, when I looked at the expected move on for the following week on Thursday, before we had that recovery on Friday, I think I was seeing like 200 points. So obviously the rally on Friday brought down the volatility index. Taking a look at what's driving and what we're going to see next week, let's take a look at the economic reports coming up. So Monday, just a bunch of Fed heads yakking it up. We've got 4 of them, so no real economic reports. But on Tuesday, employment cost index, U.S. retail sales, and business inventory. So nothing really. Red star here, NFIB optimism index, that's at 6 a.m. I know you want to wake up for that one. Employment cost index, yeah. Import prices, who cares? But retail sales might give some insights into what's happening with the economy. On Wednesday, we get that delayed employment report due to the government shutdown. So we get the January jobs report on Wednesday morning, and Casey Fed, Jeff Schmidt talks. And then for those of you who love this kind of stuff, the monthly federal budget at 2 p.m. On Thursday, our typical jobless claims, existing home sales, and another Fed head speaking. And then Friday, we get consumer price index for January. So that one would seem to be close to on time with the CPI year over year and core CPI. So those are the major economic reports and Fed head yakking going on next week. Finally, we have the earnings report. So this is the second busiest week of the year, or of the quarter, I should say. We get this every quarter. So lots of well-known names in the S&P 500, Dynatrace on Monday, Goodyear, Open Door, meme stock. Tuesday, Coca-Cola, CVS, Datadog, Ferrari, Marriott, and Oscar Health. And then in the afternoon, we have Robinhood, which has been just cut in half, and then some. Astera Labs, Lyft, Ford Motor Company, Gilead. And I guess you could read the rest of these, Shopify and McDonald's. So lots of earnings reports. And once we get past this week, things downshift a bit. But one of my close friends in the business says that um, the judgment call to hold the stock over earnings. It's bad judgment if you don't know when your stock's earnings dates are. So that one I'll attribute to Dr. Jeff Scott. In any case, the coming week should be interesting. We have lots of earnings report, lots of economic reports, and I think we could have a continuation of this bounce. If we hold this line and the VIX drops further, no reason why we can't go back and challenge this all-time high. So I think the bulls have the advantage, and it's theirs to lose over the next few trading days. But volatility is going to be the name of the game for the foreseeable future. And hopefully we don't see an immediate failure of this rally. And otherwise, I think we'll see a slew of selling coming down here. So be careful. Don't hold on to anything that's losing or not doing well. Take your profits. And if it's losing, use the strength to sell it. So far, the bulls are not out of the woods. The bears are not going to go into hiding. So we could see ourselves come up here to these candles here at the beginning of the week and get rejected. So, but my guess is that we're going to see 2 to 3 more days at least of sideways to up action, if not a new all-time high, if we can close above these highs up here. Anyway, I hope you enjoyed this video. I appreciate you watching, and tell your friends about it. If not, enjoy your Super Bowl weekend. Hope your favorite team wins. Obviously, neither one of them, both of them can't win at the same time. But this is Trader Geek Sam. Thank you for watching, and I will be back with you next week. Take care, and I'll talk to you later. Bye-bye.